This is your weekly real estate update for the greater Portland, Maine area. These are closed sales in the last 7 days, median numbers. Days on market went up to 16 days on market. The list to sale ratio still at 100%. No change there. The median closed price went up again to $470,000. The average 30-year fixed interest rate dropped quite a bit this week to 6.63. We'll talk a little bit more about that later. And of course, your US inflation still at 2.8% year over year. So this past week was supposed to be Liberation Week, and instead it kind of felt like tariff-geddon, if you will. Tariff news came out, the stock market tanked, the U.S. economy freaked out quite a bit, people grabbed up bonds. So let's get into that a little bit more. Trump had announcements, 10% tariffs across the board to imports coming in. Also, tariffs ranging from 40 to 70 to 200% on various countries for various different things. Some of those countries retaliated. China, for example, retaliated with some pretty harsh tariffs. Of course, people felt like, oh my goodness, this is going to cause the cost of goods being made in the US to go up and prices to go up. Those companies freaked out. A lot of those stock prices dropped. Overall, not a super great week for the US economy. However, as often happens, when people start to get scared about their typical investments, they move into more secure investments. So a lot of that money fled the stock market, moved into the 10 and 15-year bonds. And again, we saw mortgage rates drop because of that. I kind of want to put a little perspective on this, though. And this is the Boston Fed's opinion, not necessarily something I would put out there. But they said even in the most extreme tariff situation, so like 60% tariffs on China and reciprocal tariffs, 10% tariffs across the board, they would only expect inflation to go up 1.25 to 2.2%, which is basically what we experienced for most of COVID, and in some cases a lot lower. We went all the way up to 8% inflation at one point. So as an American, what might you expect if this continues, if this plays out, if this goes on long term? According to the Boston Fed, you might expect up to 2.2% increase in prices across the board. Of course, that is of the index, and that is not necessarily specific things. So we can expect cars to go up. We can expect technology costs to go up pretty quickly, and we can expect people to continue to move into bonds, gold, and silver. So if you are a buyer right now, I would say try to take advantage of these rates that are being driven down by the bond market. Aggressive buying of bond market allows people to lower those mortgage rates. If you're a buyer, take advantage of that right now. You know, there's a lot of other things that might not be amazing about this for you, but if you can buy right now and those rates are driven down, lock in, take advantage. If you're a seller, I would just be aware that some of that spring enthusiasm for the market has obviously been dampered by this news. People freaking out about the stock markets. A lot of people have assets tied up and down payments tied up that they've just had to kind of freeze or lost value. So be aware of that. I think it's not going to be long term, and I still think we're going to have a good spring market. But as a seller, just be advised that the buyer and buyer pools you're dealing with are obviously having to navigate a lot of these things. Hope that's helpful. Have a great day.